All right, everybody, welcome back to another live stream in the Elevate Trading Discord. For those of you guys that are watching the replay of this, make sure that you check out all the links down in the description below for access to the Discord and, some free stuff down there, charting tools, all of that good stuff. So it is Thursday night, and we are going to go over, obviously, some charts first. Before we get into that, I want to take just a quick overview and just kind of go over some of the things economically that have been going on and stuff like that. And then we'll go ahead, take a look at charts, and then I'll go ahead and give you my outlook. I am going to be keeping this stream short, just so, ease of uploading and stuff like that just kind of makes it a little easier. YouTube processes the videos faster and stuff like that. So without further ado, if you guys are new around the channel, again, make sure that you smash that like and subscribe button. Really helps me out with the algo. And make sure that you check out elevate-trading.com, which is basically my home where I am inside the Discord and all of that stuff. We've got information on all of our automated trading strategies there if you guys want to learn more and all of that good stuff. So all of the more in-depth information is obviously going to be in our Discord community, results, progress, updates, all that happy stuff. So with all that out of the way, let's go ahead and get started. So this week is still going to kind of be a little funky. I know that it's been like kind of slow and choppy this week. We got some new home sales numbers that came out. Those obviously weren't that great. I mean, the economy is starting to slip into a recession. Not very many people are, buying houses. The product prices, for things to build houses with are getting more expensive, which is making contractors not able to or have to jack up the prices to build the houses. There's also been reports of smaller lending companies as well as third-party lenders starting to go under just because they already can't deal with the basis point rate hikes that are making those interest rates go up. So this is all going to kind of start a domino effect here, over the next year or two or three. And everyone thinks that this is going to be a quick process. It's not. After the housing market crash in 2008, it was like a 10-year long recession. We haven't even hit a recession yet because there's still way too many people employed. Obviously, we all know this. Unemployment is at 40-year lows, but prices and inflation of, energy, food, commodities, houses, cars, everything, just all necessities across the board are absolutely through the roof. And it's because everybody has too much money because everyone is employed. So all the companies over the last 10 years have been bidding the prices up, and fuel on the fire was obviously, COVID-19. Printing trillions of dollars. That obviously didn't help. But in terms of economic stuff going on, I think it's probably just two main things that I'm going to touch on. I'm not going to get, in terms of like details and stuff, I'm not going to go into too much detail. One of them is something that's going to be happening tomorrow, which is going to be Jerome Powell speaking at the annual Jackson Hole Summit. Okay, so that's going to be really awesome. I love trading FOMC meetings. I love trading Jackson Hole summits and everything because, you can pretty much live stream those. Typically, they're either in the afternoon during the second half of the trading day. That's typically FOMC is normally around like 2 p.m. Central time for me. So it's normally like, I guess if you're in Eastern time, it's like 1 p.m. Or whatever. Wait. Yeah, it would be 1 p.m. Eastern time. But Jackson Hole Summit is going to be at 10 a.m. Eastern. So I guess that's 11 my time. I don't know. I'll check once I get to my screen, I'll go ahead and make sure on the times. But if you guys are here in the Discord, or if you're not in there yet, again, you know where the links are. And I'm probably going to live stream that entire event. Normally, like I do with FOMC days, I make the majority of my money on high volatility days that Jerome Powell from the Fed is speaking. That's why largely for the last 2 weeks, I have been sitting out. The only trade that I took was that most recent short when we really fell off a cliff. I took that short, I exited, and haven't taken another trade since then. So this whole week, I've been pretty much sitting out since the 20th. Okay. So this whole week, pretty much nothing too much going on, just lot chop. We're consolidating after a major move. But before I get too much into that, the other factor, which I think is going to largely accelerate this entire recession progress, is going to be two things. Okay. So the first major thing is what me and Mick Shipperson, if you guys were there for that last live stream when he actually came to my house and we streamed together here, if you guys were there for that, I kind of went over this in detail, so I'm not going to do it again. But one of the large contributing factors is going to be that big Inflation Reduction Act and stuff like that, which is supposed to decrease the country's deficit by $384 billion over the next 10 years. That's going to be one major factor in basically fuel on the fire in this entire process of our country going through an economic reset here because of all the inflation. The reason why that's going to put fuel on the fire is you've got a 15% minimum corporate tax rate, which is going to absolutely destroy small businesses here in this country. A lot of people are going to become unemployed. A lot of people that work for mom and pops and people that own mom and pops are going to go out of business. That's just inevitable. And it's going to put a lot of pressure on trillionaires, billionaires, and things like that to be, paying their fair share. But at the same time, it's also going to be hurting small businesses. So that's going to put fuel on the fire with that and kind of accelerate this whole process. The other thing actually just happened today. So while the Inflation Reduction Act was good, and we were supposed to be reducing our deficit by $384 billion over the next 10 years, literally 10 days later, Biden decides to say, oh, okay, well, we're going to spend another $480 billion and cancel fucking student loan debt. So, basically, if you paid for your school, you're an idiot, and we're going to fucking write it all off. So if you were a responsible adult and you fucking took a loan because you knew that you could pay it, everybody else that took a loan knowing that they couldn't pay it is basically getting a fucking free ride off of this. As an American and somebody that worked his way through school, I am extremely pissed that I have to pay, for some fucking millennials gender studies degree or some fucking liberal arts degree. I'm fucking pissed about that. I'm not going to lie. YouTube's probably going to censor the shit out of that. Whatever. I don't really care. Anyhow, those literally that whole Inflation Reduction Act that was supposed to reduce the deficit in 10 years by $384 billion. We literally just negated that and added an additional 60% 10 days later by canceling student loan debt. So this administration has made it very clear that Congress, they have no intent in turning Congress off in terms of spending money. They're letting it go unchecked. They clearly do not give a fuck. We keep sending war monies and stuff to support a war in Ukraine, which most of us here in America either don't want, or the liberals want to, do all their stuff. I don't want to get too political. Most people in general do not want us to be involved in wars anymore because we already have our own set of problems here on our home front. I am one to typically tend to agree with that. So, we just keep sending them billions and billions and billions of dollars, just spending. Congress just keeps writing checks to everybody going unchecked. And it's putting how this all relates without being political, how it relates to economics is this is going largely unchecked and it is putting massive pressure on the Fed. The Fed can't reduce its balance sheet if Congress keeps spending more money and increasing our nation's deficit on top of it. Okay, it's very difficult. Jerome Powell is in a very tough space. I don't know how this man hasn't offed himself yet with how much pressure this guy must be under. It must be absolutely terrible. I do not envy this man at all for his position. He's got to have some pretty big brass balls on him to be able to deal with this stuff, no doubt. So props to him for being able to, I don't know, just deal with this and do his job. I personally think that he's doing the most effective thing that he can do, which is just trying to regain price stability. And one of the things that he's mentioned multiple times that I've also mentioned multiple times that's making this a very challenging aspect for him is the fact that you normally don't have very high levels of inflation and, and things like that at the same time that you have really low, unemployment rates. That's normally not a thing. They're normally pretty correlated, unemployment rates. And if the economy is in a recession due to inflation, normally those are pretty correlated together and they're completely uncorrelated this time. Our nation hasn't seen this in over 50 years. So it's a challenge for him. The last time our nation experienced this, he was 15 years old or 20 years old. He wasn't even in government. He wasn't working at the Fed, for how long ago this was. So he doesn't know how to deal with this. It's kind of touch and go. And I respect him for doing the best job that he can. I think that none of us would want to be in his situation. But that's pretty much the market happenings that are going on. I know that some of those are kind of political, but yes, a lot of it does have to do with this administration, what they're funding, what Congress is choosing to fund, how much money Congress is spending. That definitely has a direct impact, unfortunately, on economics, both nationally and globally. So that, unfortunately, it's kind of difficult to talk about these things without getting a little political because in general, I would love this administration to just stop spending fucking money. Like writing off student loans right now. Yeah, I mean, like, should our country like maybe work that in the future? I'm not opposed to that at all. Like politically, I don't think that it is necessarily a bad idea. Doing it right now was the worst timing possible for this. Okay. That's pretty much what I'm getting at with that in terms of like the political side. But I don't want to go too much into like political stuff because YouTube actually just started censoring some of the videos that I had posted for, as usual, having an opinion. Can't have an opinion nowadays. Opinions are like assholes. Everyone's got one. But as soon as you put your opinion out on social media, you get censored. So I'm just going to leave that whole topic alone. That's what you guys know now. That's basically what's been going on. The infrastructure package, the writing off student loan debt, more money to Ukraine, just not good financial decisions for our country, right? Like if our nation's wallet was like inside the president's pocket and it was like a finite amount of money that he could spend, he probably wouldn't be doing it this carelessly, right? If he's even the one making the decisions at this point. Anyway, so the the Jackson Hole speech with Jerome Powell, that is going to be tomorrow, I believe, 10 a.m. Eastern time. Let me double check. The whole time. I probably should have done this before I started recording. I don't want local time in Jackson Hole. Beginner's guide. I'll find it in a minute. Actually, you know what? I got it right here. Let's just bring up the economic calendar. I'm just going to switch over to my screen right here real quick. This is a really good site. I don't know if you guys use this. They also have an app. I'll drop this link down in the chat right here, in the text chat for the voice channel so that you guys can see that. This is something that I have, but wow, that's like really bright. Like you can see the reflection in my glasses. This is something that I use every day. Sometimes I think on the thing, you can actually set this to alert you for the things like on the app. I don't think it does it on the desktop version. You might be able to force it to, but let's change this to Central Standard Time so I know where the fuck this is, right? Okay, so Jackson Hole Symposium. Okay, yeah, so it would be 10 a.m. Eastern Time, and it's 9 a.m. for me. So looks like tomorrow's going to be an early day for me. Yeah, his speech is right at 9 a.m. So those of you that are on the East Coast or overseas in Europe or whatever, you guys are lucky. You guys get to watch it like in the mid or late afternoon, or later in the morning if you're on the East Coast, New York time. So lucky for you guys. Looks like I'm going to have to get up really early for that because I have to drop my daughter off at daycare for 7:30. So looks like I'm going to probably be getting up at like 5:30 in the morning tomorrow. So definitely more reason for me to keep this stream a little shorter. So now that hold on one second. Oh, sorry. It was just an email from my doctor's office. Nothing serious, by the way. We're good there. Anyway, yeah, let's get this bright white screen off of here. This is like really bugging me. I am going to go over here though to these liquidation heat maps. And I'm also going to go over here to these liquidation levels as well. We'll take a look at these probably closer to the end of the stream, but I at least want to get this set up on the correct exchanges so that when I want to look at them, I can. All right. So taking a look at Bitcoin here. Wow. Whew, that is like a lot, like not nearly as bright. Actually, just give me 1 second. I'm going to turn my AC on. And no, I don't like turning my AC on because just like I'm sure everybody else is experiencing, like energy bills are fucking expensive right now. I only turn it on when I have to, and we've mostly just been like keeping the fans on lower, keeping windows open at night, so we don't have to have it going on and off all night. But unfortunately, in my office, this computer, those 12th gen CPUs and a 3090 graphics card, man, this thing gets fucking hot. I can't wait for the winter because me and my wife love cold weather. We hate hot weather. So I mean, we'll let the house go down to like 50 degrees and just throw a fucking hoodie on. We don't care. That's going to be awesome for my computer. So my computer is going to be like my space heater in my office. So I'm looking forward to that. Anyway, cheers, guys. I just popped a beer as well. I'm drinking Michelob Ultras now because I don't like Trulies and fucking seltzers that taste like fucking fruit and stuff. I want like beer, but these only have like under 100 calories and like 2 carbs per can. So I'm drinking these now instead. Those Trulies and those High Noons, I wish they just made one that tasted like beer. But anyway, so let's zoom out here. Hold on. Zoom out here. Get this to normal, and let's come to a weekly chart.
What's the temperature?
So our weekly. What?
What's the temperature in Kansas City?
The temp? What, in my house?
In Kansas City, what's the temp?
Oh, right now I don't even know. What is the temperature? It is 86 degrees right now, and it is 8:30 at night. It's been a brutal summer. I'm not gonna lie. It's been pretty brutal here. Anyway, so let's see, daily chart. Or no, weekly chart, excuse me. Our weekly chart is not shaping up very nice here at all. Now, depending on how this closes, we might be getting some kind of star pattern here. So I'm going to be watching this very closely. If this ends up turning into like some kind of like an, like an evening star or morning star pattern or whatever the shit it's called. I'm going to be watching that very closely. But in general, I mean, we don't really have too much further to go until we're like retesting 20K. I think retesting that is probably imminent at this point, to be honest. There's just like really, really, really low volume. Like this was all these volume bars here, right? Decreasing, like the red volume bars going down. That means that bullish volume was increasing, right? Well, that's awesome, but it just completely did not. There was no follow through on this at all. And now the volume is just dead. So seeing that after this kind of a formation, just in general, like this kind of price action formation, that is not inspiring any kind of hope for me at all. That looks really terrible. And now it's also looking like our MACD, obviously we're making a lower high again, and it does look like it's starting to flip over. This might be 2 weeks in a row now that we get decreasing bullish momentum on this, obviously considering the candle formation. So that's not going to be looking too great. Let's look at our OBV. OBV doesn't look that great either. So this is already super bearish here as well. So if you look and you zoom in on this, comparatively to the price action, to the on balance volume. Now this is spot on balance volume, by the way. If you draw a line here from this high, okay, this is kind of like where we leveled off. We ended up getting an equal high and then a higher high on this pop on OBV, and it was like a much lower high on the price action. So that is like super fucking bearish right now. That's really bad. Also breaking below this peak here so far, closing below this peak, but having like a higher low or whatever in price action, also not good. That's pretty bearish right there on the weekly chart. But obviously we still have a few days to go, right? Like nothing is certain. We're going to see a lot of volatility tomorrow before the weekend. I'm expecting volatility like hardcore during the morning and with all the announcements, whatever he decides to speak on at the symposium. I'm expecting a ton of volatility, and then it's probably going to die by like midday. And if we go up, I think we sell off into the end of day. And if we go down, I think we kind of bounce into the end of the session. That's normally the way things go on these kinds of days. Like on an FOMC day, if the news is super hawkish and the price rips down like all through the middle part of the day, normally you end up seeing some kind of a rally into the end of the trading session for the day. And then the exact opposite, right? Like if it's super dovish and the price shoots up or whatever, normally it's a pretty low volume rally. People are just scalping, they're using leverage. It's manipulated and just not really good spot volume on those kinds of moves. And then you see all of those people start taking profits and you see a sell off into the end of the session. I'm expecting the same kind of volatility tomorrow. It shouldn't be any different in my opinion. I've been doing this long enough that it's a pretty standard thing. If you've never traded these kind of events before, I wouldn't say do it with a lot of leverage first off. And I would say be very careful. Don't just ape in. You kind of got to pick your direction. It's almost like flipping a coin, honestly, on these days. You got to look at the overall price action and then kind of say, okay, overall on a 4-hour and a daily chart, is this biased? Would I already be biased long or short? And then just kind of shoot your shot on it. Like that's pretty much it. So because you never really know what's going to happen with some of these news events, right? Like we don't know until they happen. So all you can do is really stream the event and hope for the best. And if you're on the wrong side of the trade, you close that bitch down immediately and go the other way if you're fast enough. And if you're not fast enough, then you say, hey, you know what? I was wrong. I missed it. It already hit my stop. I'm going to sit out, wait for the volatility to end, and maybe I'll try again on Monday. Normally entering trades on weekends is not good. The volume is normally typically really low. Anyway, so daily chart here has been pretty interesting. I'm going to go over this again in a short video. Tomorrow I'm going to do, I do 2 of those like short analysis videos per week. I think I still call them 90-second analysis videos, but they're actually like 4 or 5 minutes long now. So I just kept the name because it's just funny. It's like, oh yeah, it's 90 seconds. And then you look at the time and it's like, oh, it's 4 minutes. But I try to keep them as informative as possible. And what I'm seeing here on the daily chart is just not looking too great to me. Now, I think I mentioned this in the last little short video that I did was this kind of formation of these candles here that we're seeing on the 4-hour and the daily chart of how we broke down out of our channel. Like our trend line broke down, our rule-based trend line broke down, right? On high volume. And now we're kind of like floating around that bottom channel line, right? So this was extremely reminiscent to me of what happened, I think back in March, or was it April? April, right? So we had this forming, okay, all at the beginning of the year. This started forming, during our beginning of the year crash, right? It was a shit show. And then we started forming this wedge, right? We had a throw over fake out, came down and closed on high volume, closed below the bottom of the channel. And then the price action and the volume died completely. And we were just battling this bottom of the trend line and in the lower range here until like here, like the end of the month. And then it just died. Okay. So if you look at the volume per bar on this move, okay, you guys know I focus on volume a lot. If you look at the volume per bar on this move, right, we had this huge buy up. We had a fake out. We made a higher high in price action, but the volume per bar was a lot lower than our first 2 pumps. In fact, it was consecutively lower. Okay. High, lower high, right? And then you had a high, higher high in price. Okay. So the volume was not consistent with the price action moving up, which is why everybody through here was like trying to fade this, and everyone fading it like me was getting fucking clowned and shit. And I knew at some point this was going to flip over. And I said, look, if you get bullish here on the breakout of this, you need to wait and make sure that a retest of these levels at 43K hold, because if it doesn't, the whole wedge is going to break down. Sure enough, that's exactly what happened. We got one little retest of it. It didn't hold. The very next candle, all of those support levels broke down. Everybody started selling. Super high bearish volume, higher than we had seen basically all through this consolidation. We closed below the channel, consolidated underneath the channel on declining volume for, I guess, how long was this? From, let's see, when we broke down, it was the 11th until finally it shit the bed about here on the 5th. So almost a month of like slow, grindy, choppy consolidation. And then finally the price took, shit the bed. That's kind of what happened here, right? So depending on how you draw this, I saw some people with a triangle. I saw some people with a wedge. I saw some people with a channel. It doesn't really matter how you draw your trend lines, right? They're always going to be, in general, they're always going to be very subjective. Okay, so what ends up happening is no matter how you had this drawn, some people had this drawn like, oh yeah, look, we're breaking out of it finally, and whatever. At the end of the day, to me, it was still a situation like this, even if you had it drawn as a triangle where you got a throw over, volume was garbage and was declining, and there was just a retest didn't hold, and the price ended up dropping down, breaking below it, consolidating and dying. The same thing is happening here, right? So we've got these volume pumps, and what's been happening now, everybody thought up here, like this is where everybody started getting really excited, right? And then we saw that big pullback and then a huge V-shaped correction, basically forming a double top. And then we got a 50% retracement down to this midline again, and it bullishly retested it. Most people got bullish in here. And if they weren't already long from here and they missed this, this is where they were longing from. Now, here was the problem with that. If you look at volume per bar first, right, and you look at price structure, there's a couple things I was looking at with this. Okay. The first thing was this RSI up here was also not consistent with the price action we were getting at all. We just got top, just flat topped all through here. Same top over and over, higher high, higher high, higher high, same high, same high, same high on the RSI multiple times. That's already a big red flag. That means that the RSI is a momentum indicator. It's a single line momentum indicator. If it's not consistent with the price action, it's either one, forming divergence, or two, it's like flat topping. And what this is actually known as is exaggerated divergence. So this would be exaggerated bearish divergence, where you get the same high on your momentum indicator and you get higher highs in price action. That's exaggerated bearish divergence. Now, it did take, what was this, about a month for that to play out. Keep in mind, I'm on the daily chart here. Now, this isn't to say that there wasn't opportunities on lower time frames, of course, right? But in general, for larger moves, this is what I'm looking at for my overall market bias, right? So I'm kind of just walking you through how I was able to identify this. I'm going over this first, by the way, and then if you're watching the replay of this, you could probably skip ahead maybe 5 or 10 minutes. And then that's going to be like my overall outlook for where we're at now and what I'm going to be expecting. I'll see if I can put a little title down in the bottom so that you guys can just click on those. But anyway, so again, what else was not consistent with these higher highs in price action, right? We got these lower highs in volume again, right? Decreasing volume, higher high, decreased volume, even higher high, even lower volume. Like these were just like, there was red flags all over the place for this. And then pretty much up here, when we got rejection and we started getting these wicks up here, this is where everybody started flipping bearish. And it was like, holy shit, it's just like the volume is just too low. It's not going to go up anymore. Bam, we got the sell-off. So similar to the wedge that I've been harping on, for how similar this is, what happened? We broke all the way down through the channel, which was a massive price move. I think this was something like 10 or 12%. Okay, let me measure it. And I'm not going to measure from high to low. I'm going to measure from the closes, okay? Almost 15%, which is, wow, that's actually quite a bit. So from high to low, it was almost 18%. So 15% from close to close, almost 18% from high to low. 18% drop in that. That's pretty fucking significant, okay? Now what's happened? So we landed in this zone here, okay? I've had this zone as my daily and 4-hour kind of, well, for the most part, it was resistance through here. This is just a support resistance level, right? I've had this level drawn since, basically in here, okay? So months ago, like 2-3 months ago. That held true. We broke straight down through it. That freaked me out because there was no stop through there. It was just 0 to 100 real quick, right? So we ended up doing that. And what ended up happening is now we're starting to consolidate. So just like that wedge that we had, we're starting to consolidate right at the bottom of that channel line. And seeing price action with big wicks like this, especially with big wicks to the downside at the very beginning of the consolidation, isn't really inspiring too much confidence to me that this is going to be a bottom. Okay. Normally, after a really large move like that, we see some kind of a consolidation. Now, granted, through here on this move to the top side, we didn't. It was just up and then down, and then up and then down. And we didn't really get any of those moves. But if you really zoom out and you say, oh, okay, well, look, this was our leg down, we consolidated. This was another leg down, we consolidated. If this is the beginning of another leg down, then we have quite a ways to go until we can even think about looking for some kind of major support area. Okay, so this would be my next level of interest. And then this white line down here, this is just a line at 20K, like our overall 20K support. Okay. It's not really meant to be a midline, but it's kind of actually working out that way. Actually, if I take it off log, no, it's not, but whatever. Anyway, this is our range low, right? A lot of people I've seen are calling, oh, look, our range low is here at 19.4. Our range low is here at 18.9. No, do the real range low on the daily chart, right? Our actual range low is all the way down at 17.6. If that breaks, holy shit, like Katie bar the door, it's over. Like you're gonna see 10 to 15K. Like it's gonna be really bad if that happens. If we go all the way down to 17K from here, I can promise you if that breaks, it's going deep. That would be like the full-blown market capitulation. That would probably be the final rinse out. And then that's when we would consolidate for like months on end, start our actual crypto winter for the next 6 months. It would just be fucking dead. There's no volume. Everybody got rinsed. Crypto is fucking dead. CNBC is going to say everything is dead. And it would be crypto winter for like 6 months. During that time, that's the time that I do all my research on the projects that didn't get rinsed out. That's when I do my research on all the NFTs that didn't get rinsed out. I look for floors going lower. I look for altcoins that are on super hardcore discounts, but they don't care about the price of their coin. They're still building shit. And that's when I start throwing money at stuff for long term. Like I'm talking long term, like the next year or two. I just start throwing money at shit, throwing money at it because the projects that don't die, don't get delisted, weren't committing fraud or, like all the kinds of things that we've seen so far in this bear market with like, VCs going under and Three Arrows Capital and, Celsius Network and UST and stable coins. There would probably be another scenario, something like that. Tons of FUD and you know the deal, like, the game plan, right? We've already seen that through here. And then we saw it again through here. We certainly saw it through here. This was like the whole Elon Musk thing, or actually, I think the Elon Musk thing was way back here at this point, but whatever. You guys, if you guys have been around for the last year or two, you guys know what I'm talking about. You guys know what to look for. When those things start happening, that means that you're probably going to be forming some kind of bottom consolidation. In my opinion, I'm not convinced that this whole formation is a bottom yet. I'm just not. I've been trading markets for almost 12 years. This does not look like a bottom formation to me. There was no strong, significant bounce. This is a textbook bear market rally, no matter what way you slice it, especially if you're a volume trader. This is a bear market rally, especially when you see a consolidation like this and it's just ping-ponging back and forth. Like that's classic bear market consolidation. Like this isn't a bottom in my opinion. Nothing in my opinion yells bottom for this, especially when you've got bearish divergences, huge breakdowns. No, and now we've got a huge breakdown with this is also characteristically weird to me, right? Every time we've been ping-ponging, what did we do? We went straight up, straight down, straight up, straight down, straight up, straight down, straight up. This one we kind of hovered. Now we've gone straight down. We did not get a straight back up at all. Like we just stopped. That's actually bad right now at this point, especially breaking down out of this channel. So if we look at OBV, and again, these are measured different, right? So again, reminder, this is volume per bar. Okay. It's volume per bar. On balance volume is calculated differently. Okay. So what I'm looking for, honestly, in this whole situation is this massive, I wonder if I can just bring this up full screen. Hold on. I've been watching this whole thing very closely. You could even drag this trend line like way back to here, but I'm obviously this isn't going to be perfect, okay? But in general, this is like the main trend line to be watching. Some of you like to do things like this, okay, where you kind of like get, kind of like two of the lines or whatever, and you put them in parallel so that you kind of have like a range, like a parallel range or whatever. That's also fine too. I'm not going to argue that. That's perfectly fine to be doing something like that. But in general, this is pretty much what we got here, okay, on our on balance volume. So this entire time while price has been leveling off and failing and leveling off and failing, leveling off, failing. When you start comparing that to the actual price action here, we've just been, this is another reason why I've been super bearish and I've just been calling this a bear market rally. That's just absolutely massive divergence. Like this entire time, we've been making lower lows on the OBV and higher highs and higher lows or whatever in the price. Like that's not, that's not bullish. Okay. That's just not. Okay. It's price structure first, volume second. Like that's the way it goes. And then rule-based trend lines, right? Like that's the three things that are the most important that you need to be looking at. This kind of consolidation here, most recently on this, again, we're getting higher highs in price. Our OBV, it's flat, not good. Probably tomorrow, if it's not dovish news and we don't see like some like huge fucking green dildo, like on bullish news and the S&P 500 starts fucking rocketing like crazy. If we don't see like probably tomorrow on this event, like this is going to be the only news event that would be able to push this higher. And I really don't think after how much money, $1 trillion that just got spent in the last 10 days, I really don't think that's going to be happening. I really don't think Jerome Powell is going to feel dovish on the outlook of the economy and be like, oh, you know what? It might be a good idea to only do 25 basis points. First of all, that would still not be bullish because it's still a rate hike. It would just be less hawkish. And I think that there is at least a 65% chance tomorrow that he is going to say, yeah, no, we're not like the 50 basis point hike. Like, yeah, no, we fucked up by doing that. We have to continue doing 75 until further notice. I think that there's a 65% chance of that happening. That would be extremely hawkish because that's the reason why people think that Jerome Powell is going to pivot, is because he did a slightly less basis point rate hike last time. I don't think that that's going to be happening tomorrow. I'm pretty sure that in September, I think he's going to do another 75. Why? Well, we just spent another $1 trillion. So if that does happen, we stand a pretty good chance of maybe not seeing some kind of bloodbath like we saw here. But we do stand a pretty good chance of putting in some kind of bearish engulfing candle. Now, what does that mean for the weekly chart? Well, that means probably at least retesting our weekly lows, certainly at basically 21,000, and potentially closing below this little support resistance reclaim at about, just under 21,000, like, 20,500. So on the 4-hour chart, what really do I have here that I'm looking at? Well, I mean, we've got this massive big blue bear flag, right? I don't know why this is still visible here on this 4-hour chart. Let me hide that. Bink. Wait. Hold up. There we go. Now, what do we have here? We've got this huge, massive macro bear flag. Okay. This huge bear market rally. And what do we have? Well, we also have a bear flag forming on our lower intra-week and intra-month time frame, right? This one right here. This is also kind of excuse the term, red flagging. This isn't a good situation either. One, for the reason I just mentioned, which is we're consolidating underneath a massive multi-month trend line. That's not good. Two, the volume per bar here is very low in comparison to our last move. Like there's no substantial buyback here. We didn't bounce. We just flattened out. That's not good. So the volume per bar, low. Consolidating under a multi-month rule-based trend line, bad. Our MACD and our RSI, flat, leveled out, which basically means it could go in either direction. And then what I look at is to form a bias off this is one, the market structure, which is flagging again, and not in a good way. And two, I look at the on-balance volume to see what the overall trend is. So if you look up here, right, this is where our on-balance volume was for here. So the lowest that we went before we tanked was basically here. Okay. So if you take a line, and I'll mark this on the chart. What do you guys see on that? Well, for me, I see price action making a lower high, and I see OBV making a higher high. That's not good. That's bearish, especially with low volume per bar. That's also not a very good thing. I think if this level, honestly, at the end of the day, I think if we lose this kind of zone here, okay, on the OBV, whoa, what happened? If we lose this kind of zone here on the OBV, this kind of like, imagine if this was like a box, right? Actually, I'll probably let me just draw a box. I don't want to clutter my OBV indicator too much because I have drawings on my 1 hour. But basically like this little range here, like this would be like the range to not lose on the OBV. So let's actually turn this green because technically it's support. This would be the range to not lose here. This would be bad. So unfortunately tomorrow, if it is like kind of a hawkish event and, you know, the legacy markets are going to start getting dragged down and stuff like that, it's not going to be good. Now, in terms of legacy markets, the first thing that I like to look at is the DXY. Okay. This is flagging, well, bullishly, right? This isn't an inverted chart, but it might as well be because it's inversely correlated to what Bitcoin and the legacy markets are doing. So like this going up is bad for the economy. And this going down is generally good. One easy way to depict that is to zoom way the fuck out to the weekly chart. You know, and you can see all the way back to like, you know, 2000, like this way back here was like the 1985 market crash when we got taken off the gold standard. This was the fucking collapse of the housing market and this was the .com bubble burst, which was really, really bad. This huge spike in shit was the housing market crash. You know, you can see that that 2018 market crash and then the recovery or recession kind of that we had from that all through here. So this in general, when this goes up is not a good thing. We're at 20-year highs. Okay. The last time we've been this high was 2002. It's not good. Not a good thing at all. And what I just noticed is that on this weekly chart, last week, we actually just broke these highs. Now, last week in the Discord, I did make a note saying that, hey, guess what? If we start clearing these highs and closing above this, this is probably going to keep going to the top side. So far, that's what's happening here, which is not good. Oh, okay. There was my line. This is below my line. Right now it is. So if we come back down to that kind of 4-hour time frame here, we've got, what kind of market structure do we have? Well, clearly we've got some kind of a flag or a wedge or whatever here, depending on how you draw your trend lines, right? They're all subjective, but in general, you know, considering market structure, this is a bullish consolidation, right? So that's not looking good. Now, one thing that I do like about this is that in terms of the volume of it, I know this isn't super reliable with the dollar, but in terms of the volume, it is starting to level off and starting to flatten out here, which is good. But this is still technically a bullish pattern here. Now, when you start comparing that to, you know, say the ES, right? Or the S&P 500 for those of you, we can already see here that, hey, guess what? Did we retest 4,000 as support as predicted? Well, yeah, of course. It's like a massive psychological level, right? Do I think that we continue higher and we break above these highs? No, probably not. We made equal lows here. That's all well and good. We use this as support. We filled this gap. That's all well and good. I can pretty much delete this here. We do have a gap above us. I personally think that where we're at now, in terms of legacy markets, that this probably here acts as resistance. Okay. I personally, and there, it looks like there's another tiny gap up here as well. Okay. So these are our little resistance areas with our gaps. Okay. And then we've got our, and then we've got our high up here. Okay. So this is the high to beat. And then we've got these two resistance levels. Honestly, in my opinion, even if it is hawkish tomorrow, I could kind of see this coming up and retesting like 42.50. But after that, I think we reject hard and we start breaking these lows. Okay. I think we start breaking these lows and then we start coming down and start retesting these previous areas. Okay. So technically, like, this gap was filled. That doesn't mean that it's not going to act as a support level later. This gap was not filled. Okay. And that's just kind of sitting down here, way down at $3,700. That is quite a dip from here. If we go down there, you're talking a 12% market dive. It would probably take a couple months for that to be playing out here. It's not just going to happen overnight. But that's kind of what I see with the S&P 500. I see us making an overall lower high. Now, that's what market structure tells me. What does volume tell me? Well, through here, we made a lower high, and that's why we got this dip, right? So we ended up getting some bearish divergence here. Okay. That ended up playing out. We got a retrace. Okay. Now, in terms of volume per bar, again, how were you able to start identifying these tops? Well, we kept pushing higher and higher, right? So we got a high, and then we got a higher high in volume. We got another higher high with another higher high in volume. And then we proceeded to get another higher high in price and a much lower high in volume. That tells you that price action is exhausted up here. It's exhausted. Plus, you've got an oversold RSI, but you kind of don't want to count on that by itself. Anyway, and then obviously followed by pretty massive bearish volume here. That was a pretty big volume sell-off. Now, again, in my opinion, based on volume per bar, we do have decreasing bearish volume here by like a lot, which is good. But at the end of the day, if we start looking at our OBV here, it does look like our OBV also is going to be putting in a lower high as well. Okay. So notice that the divergence for the OBV on this, between these two tops, was not here. Okay. On the OBV, it was not. We did get a higher high in price and a higher high on the OBV. That is why volume per bar is also a good thing to look at. Nothing says you can't have more than one volume indicator, right? So, have multiple data sets that you can kind of compare and contrast. If they're all looking the same and they're all even, then yes, it's probably going to be a trend continuation. Fantastic. But if one of your main indicators is saying otherwise, and then you've got another indicator that's oversold or overbought or whatever, and the price structure looks weak and the fundamentals and the news is not positive, chances are you're topping out. The volume is not going to be there to support it. For right now, that's pretty much what's happening. And what's happening again here is we had this top, okay, in the price action, which was a lower high in comparison to where we're at now. Let me delete this. Okay. And I'll zoom in for you, get this off the screen. Okay. Comparatively from here, okay, we're a lot higher in price than we were over here. Now, in crypto terms, not much higher, right? It's like what, 1%. Okay. So in crypto terms, not that big of a deal, but in legacy terms, that's like kind of a bigger deal. So we're higher than that over here. Technically that's congruent, right? It's confluent, not congruent. So that's kind of confluent here. So, we've got this higher high compared to here. We're making it higher so far on the OBV. Now, tomorrow's OBV, we're going to find out what happens. So either this is going to rip up and we fill this gap and we close higher and we get that consistency here. That from here is when I would start looking at this high in the OBV. So like if we push higher and we make like a higher high in the OBV and like a lower high in the price, that's like the top. Like that's going to be your confirmation that the price ain't probably going much higher than this. That's when I would start looking at volume per bar as well for extra confirmation of that. And as we've seen, the legacy market moves have been greatly affecting Bitcoin to the downside and not really affecting Bitcoin to the upside. So like over the last couple days, is this what, from I guess 824 to now? We've had like a pretty big bounce on the indices on the legacy, right? Well, if you look at Bitcoin since the 24th, yeah, we really fucking we really haven't, right? Like the upside was extremely limited and choppy, and this is very consistent with how we've seen Bitcoin and the legacy markets, how they've been kind of correlated. Like Bitcoin gets absolutely wrecked when the legacy markets go down, the S&P 500 goes down and absolutely just destroyed. And Bitcoin has basically been outperforming the legacy markets on the downside and massively underperforming the legacy markets to the top side. That's not good. So I expect more of the same, honestly. We'll have to see how things go tomorrow. Obviously, right now, everybody's getting excited. Oh, look, we're bouncing. It's probably going to be, in my opinion, over the night tonight into tomorrow morning. It's probably going to be the kind of thing where it's a buy the rumor, sell the news kind of event. But again, honestly, we don't know if Jerome Powell is going to be, super hawkish or more dovish or whatever. We just don't know until he starts speaking. So it's going to be a very interesting day tomorrow. In general, in terms of price structure, I would be looking for this to be breaking down and see some kind of a continuation of this flag. Okay. So, if you want to use fibs for that, you can do one of these numbers and say, oh, okay, well, I expect at least a test of the 382, a 1-to-1 of this move, which actually that would be, if it nuked hard, that would be pretty likely. We'd be retesting our true range lows. Okay. That's right at 18K. If you want to snag golden pocket, you're talking 19.5 to 20K. So, there's some solid levels that are, confluent with our fibs in terms of psychological levels, as well as our Fibonacci levels. There's also our major level of demand down here, right? So those are kind of confluent, but price structure would lead me to think that this continues to the downside, especially consolidating under such a massive multi-month trend line. Volume in general per bar is low, right? Like we keep getting a pop, right? Like we're getting a buyback. We're getting buybacks on these candles, and it's just like lower and lower and lower volume on each buyback. That's not good, especially if you're getting higher lows. You're getting less buyers to support the price at those higher and higher levels. That just leads to a price structure failure, right? So that's kind of what I'm going to be looking for. That's the volume per bar. Again, the OBV. These levels break down, that's going to be no bueno. Okay. If this little box here where I've got this, that breaks down, that would definitely be a continuation of the downtrend, in my opinion. So I'll go over this in probably a lot less detail tomorrow in the short Bitcoin video that I do. But it is already 9 o'clock here. I have been streaming for an hour, so I'm kind of going to kind of call it a night here. I think we got into some really good topics. I kind of summed them up quickly and concisely. I'm not going to lie. I actually had like a text document here with like talking points for me tonight to keep me on track, because normally I just keep going and going. And then the next thing I know, I've been streaming for 3 hours. So let's come back to my video. Anyway, I really appreciate all of you guys joining tonight. Thank you very much for coming in. Again, if you guys are not in the Discord, make sure that you check out the links in the description below of this replay so that you can get into the Discord. You can get all of that alpha and stuff. I post all of my content free to the public. There are obviously certain channels that are in there for paid members. We are going to be restructuring how we're doing like the pricing and stuff for like the Discord and packages and bundles with our automated strategies. For more information on the automated strategies, yes, you can find backtest results overall from when they were published on our website at elevate-trading.com. There's links for that in the description below as well. However, the most updated, most recent results, all of that information, and you guys can come in and ask questions, even as free members and stuff. There's a totally free section of the Discord. Check the link in the description, and you can get all of your questions and all of that stuff answered in the actual Discord for like up to date, updates on what we're doing, what we're developing, what we're building, what we're releasing. P&L reports. We've got spreadsheets of all the trades that the bots take and all of that shit. It is all there for you. It's all transparent, all displayed. We don't rip anybody off with these things. We only release products that we actually believe in. So that they can make you guys more money. But anyway, if you guys like the video, let me know, give me a thumbs up. Make sure that you smash that like and subscribe button down below. It really, really helps me out with the YouTube algorithm and all of that. And also stay tuned tomorrow. I'm also going to be releasing a YouTube. Well, I guess by the time you're watching this, it might be tomorrow, but whatever. I'm going to be doing, I guess today, I'll be releasing another YouTube video that's going to be focusing on risk management, but it's going to be relating it more to leverage and some of the kind of secret tips and tricks that I've been using for the last 5 years of my trading to utilize leverage in a slightly different way to minimize my losses when I'm wrong and absolutely just wreck it on winning trades that end up running. And I'm going to show you guys how to do that with, keeping that, risk to reward ratio like really nice. So make sure that you guys stay tuned for that. I think that's about it, guys. So until then, that's going to be pretty much it. I hope you guys have a wonderful night if you're watching this tonight. And until tomorrow, happy trading.